at the start of the class. So hopefully that was useful to some people or just interesting. I highly encourage you, as business students and just people in the world to read and think about, critical issues that are going on, and some of what I was asked about today, these types of ethical thoughts around intangible assets. It's massively important. If you look, and I mean, I'm not going to go off on another soapbox mode again, but even if you look at the things that are happening with Facebook or Meta right now with this whistleblower and the leak and so on, you will start seeing that some of that is eventually, it also ties into some of the, I guess, the intangibles that the company has, generated over time, and them trying to protect themselves, maybe even at the expense of the public. All right. So all roads lead back to business, and sadly, sometimes all roads lead back to money, which is, hopefully we know that money is not the be all end all, because if we only operate in the pursuit of money, then it's going to be a difficult life that you create for yourself. Anyway, so that's my mini TED talk. So we need to talk about free cash flow. And this is just an analysis piece after doing the statement of cash flows. So today, what's going to happen is we'll talk about free cash flow. We'll look at the two examples here in the textbook. I'll give you an example to do on your own, which will be really quick. And then we'll go back into finishing the examples that are on our chapter 17 handout. And then my hope is that there will still be a little bit of time left where I can give you guys a statement of cash flows in the class to try to complete on your own and see if you are able to cope with that. So that's really all that's planned for today. We won't go into chapter 18 or anything like that, and we'll get to chapter 18 on Thursday. I just want to, sorry, I forgot to say this in all the excitement of the other conversations we were having, but this may seem far away, but it's not. The homework for chapter 17 is going to be due on Tuesday. So it's literally just a week away. And at the same time, the test and the quiz will open on Tuesday. The test and the quiz information is already on Blackboard. And probably at the end of this class, I'll just highlight for you the things that are going to be tested. But please plan your lives so that you have some time to do the homework for chapter 17. I find that, people sometimes don't do this homework for this chapter for whatever reason. I think they're getting busy in their other classes, and it will be pretty devastating to your test results if you don't practice. There will be a whole statement of cash flows on the test, so you need to be able to do it. All right, so free cash flow is a calculation that we make once we've already done completed a statement of cash flows, because we're trying to see how much cash does the company actually have, not just from operating activities, because that's nice. I mean, that's saying, yeah, this is how much money you generate from your operations. But the thinking around free cash flow is that money that the company generates from its operations, at a minimum, the company would have to use some of that money to replace any assets, right? And to invest in any assets, as what they call here in the book, new plant assets, to maintain its current level of operations. And they also have to pay dividends because for the most part, if a company is usually paying dividends, then investors are expecting those dividends to be paid going forward. And so someone who's maybe looking to invest in a company or, looking to lend them money or something is going to say, okay, fine. Sorry, I can see how much money you're generating from your operations, but what are you going to have to plow back into the company to keep your assets going? And how much are your investors expecting from you? So here's an example from the book. This company, MPC, produced and sold 10,000 personal computers this year. It's reported $100,000 net cash provided by operating activities, so $100,000 over here. In order to maintain production at 10,000 computers, MPC invested 15,000 in equipment. This capital expenditures means asset payments for assets. Okay, so payments for equipment or payments for land or buildings and things that the company is buying. So this is the 15,000, right? And it chose to pay 5,000 in dividends. So that goes to dividends. Its free cash flow was 80,000. How do we get there? 100,000 in net cash provided by operating activities, minus the 15,000 paid for equipment, and minus the 5,000 paid for the dividends. And now it's saying the company could use this 80,000 either to purchase new assets to expand the business. So not just assets to keep the business at its current level, but to expand the business, or pay an 80,000 dividend and continue to produce 10,000 computers. They're not going to do that, probably to pay out all the money. They're just saying that this 80,000 is what's actually available to be used for other things, not just to keep us at the same, level that we usually would be. And so this is the formula for free cash flow. Net cash provided by operating activities minus capital expenditures minus cash dividends. And over here, they give us an example of Apple in their 2019 statement of cash flow. So, you can actually see, I guess, to some extent that, statement of cash flows is happening in the real world. What will be capital expenditures? I was just saying payments for equipment, buildings, land, things like that. So the payments that the company is making so it will go into the investing activities section, if that helps in terms of your question. Okay, so Apple Inc. Apple Inc. has net cash provided by operating activities 69,391. Remember that most of these numbers are in millions. So it doesn't say here, but yeah, okay, over here it says in millions. Yeah, so 69,391 is the net cash provided by operating activities. So if we wanted to do Apple's free cash flow, yeah, you can see that it says cash paid for dividends 14,119. It's not $14,000. It's it's 14 billion, but 14,119. And then the other piece of the free cash flow is this capital expenditures. So, to see to your question that you were just asking me, what is that going to be? It's going to be this payments for acquisition of property, plant, and equipment, all right? It's because it's when they're investing in any buildings, land, equipment, and so on in the business. So the three numbers that are important here, it's the net cash provided by operating activities, the payment, right, the purchase of the property, plant, and equipment, and the cash paid for the dividends. So they'll do the calculation for us here. Net cash provided by operating activities 69,391, less the expenditure on property, plant, and equipment. That's the capital expenditures 10,495, right? And then less the dividends 14,119. So the free cash flow for Apple is 44,777. And what this also tells us is that you can go into the financials of these big companies and use what we're learning here and actually come up with answers, right? Come up with numbers that make sense. All right, so that's Apple. Let's see if I can. Okay. So why don't we have you guys do the free cash flow for this company? What's the name of this company? Chicago Corporation. Yeah, you can see it's a statement of cash flows for this company using the indirect method. They've got net income of 19,000, net cash provided by operating activities 29,300. There is a purchase of equipment and there's a payment of dividends. So I'm going to leave this up for a second so you have an opportunity to look at this, and using what we just learned about the formula for free cash flow, which is net cash provided by operating activities minus capital expenditures minus dividends, calculate the free cash flow for this company. I'll give you until 11 o'clock. And if you don't know what the formula is, either open up your textbook or, go online to the textbook to get the formula.
So the capital expenditures will be all the investing activities?
No, it's only payments. Remember, the expenditures are only anything where you actually paid money out to buy land, buildings, or equipment.
Okay.
Okay.
Mhm.
You still have 4 minutes. You do have time if you want to get into Wiley and get to the question, go for it. Two more minutes. If you're done, that's fine. You can relax in 2 minutes. Otherwise, those who are still working, please round out your calculations. Okay, so we're at time. So I think the answer is right here, if I'm not mistaken. Yep. So you should have had these numbers. The net cash provided by operating activities, 29,300, minus the 19,000 for the payment for the equipment. Right, the sale of investments doesn't form part of that, the calculation, the inflow from sale of investments, not part of capital expenditures. Again, capital expenditures means payments that you are making for buying capital assets. Again, that's plant, so like a factory or land, buildings, machines, equipment, things of that nature. And then you also had to subtract the 9,000 for the dividends. So 1,300 is your free cash flow. That's the number that you should have come up with. I didn't ask you to do B. We can just talk it through, explain why free cash flow often provides better information than net cash provided by operating activities. So it's saying, why is this $1,300 more useful information than just looking at net cash provided by operating activities? Again, is telling the reader kind of what the amount of cash that the company can generate just from its operations, right? From buying and from providing services or selling stuff and paying all its bills. So net cash provided by operating activities fails to take into account that a company must invest in new plant assets just to maintain the current level of operations, right? In net cash provided by operating activities, there's no investment in anything being shown. So we do need to know, okay, you've got this much money that you generate in your business, but how much of that needs to be put back into the business in order to maintain your operations? Companies must also maintain dividends at current levels. This is what was said above in the textbook. The measurement of free cash flows provides additional insights regarding a company's cash generating abilities. All right, so there we have it. That's free cash flow. I'll throw, let me see what the time is here. I think we kind of get it, but I'll throw one quick one at us that maybe is not as obvious the way it's written. Let me see here. I think it's 17.9. Yeah, 17.8 or 17.9. Let's just go with 17.9 because the numbers are a little bit easier. So yeah, I'll read this with you and then you guys calculate what you think free cash flow should be. Sprouts Corporation reported net cash provided by, I keep forgetting that I shouldn't do that. Net cash provided by operating activities of 412,000. So again, net cash provided by operating activities is 412,000. Net cash used by investing activities is 250,000, and net cash provided by financing activities is 70,000. So you can already see here they're probably giving you more information than you need. So you need to remember that the formula for free cash flow is net cash provided by operating activities minus the capital expenditures and minus the dividends. In addition, cash spent for capital assets, so this means capital expenditures during the period, was 200,000. No dividends were paid. Okay, so you already know the dividends paid number is 0. Calculate free cash flow. So go ahead and calculate free cash flow. I'll give you 2 minutes because you guys are gurus now, and I gave you some hints while we were going through it. One more minute. Okay. So what are we thinking? Is an answer in the chat 212,000? I'm thinking the same, because we're saying you take the cash from operating activities, net cash provided by operating activities. You ignore the the cash used by investing activities number, because that's just a total number. You don't know what part of this is actually being paid for capital expenditures. The financing activities number, you also, the whole total number you have to ignore, because you only want to know the dividend amount. You can't take the whole financing activities amount. So finally, over here, they give you useful information, right? They tell you that 200,000 is what is paid for capital assets, so that's capital expenditures, and they tell you that there is no dividend, so that's 0. So the answer here is 212,000 is your free cash flow. All right, so I think be careful with these questions, and the one above it, it's kind of the same, where they give you more information than you need. You have to remember the free cash flow formula is just the operating activities minus the capital expenditures minus the dividend. Okay. And just to I guess beat the proverbial dead horse here, I'll do this last one with you guys. The management of Uhuru Inc. is trying to decide whether it can increase its dividend. During the current year, it's reported net income of 875,000. Okay, that's nice, but we know that net income is not part of free cash flow. It had net cash provided by operating activities of 734,000. So this number is the start of the free cash flow calculation. It paid cash dividends of 92,000. This also needs to be in the calculation. And it had capital expenditures of 310,000. So these three numbers are what we will use in the calculation, compute the free cash flow. So let's see if we can do that together. So it's 734,000. Is the net cash provided by operating activities. The capital expenditures is 310,000, and the dividend is 92,000. So 332,000 is is the amount of free cash flow that is available. And then the company can decide whether they actually want to pay a dividend. They also have to think about whether they have any retained earnings available. I mean, they have net income of 875, so they should have retained earnings available to pay the dividend. Okay, so I think we've kind of covered free cash flow. That's all there is to it. This is a small question that's usually like a part B of a cash flow question, or it's a multiple choice question, right? It's not a huge part of the syllabus, but it's easy points, and I just want to make sure that everybody is actually able to do it. Are there any questions on free cash flow, or anything you want me to go over again before we move on? Okay. So what we'll do now is there are a few questions here that haven't been covered yet. We finished, I think, last time with number 6, if I'm not mistaken. I may be mistaken. Okay, so we finished exercise 6 last time. What I want to do now is have you guys work on your own on number 7. It's still not a full statement of cash flows. It's just a refresher on how to calculate operating activities. And I will read it with you, and then you can, or I'll put up a previous solution where we did operating activities to remind you how to do it. Remember, I said that the operating activities section is by far, the trickiest. So, excuse me, I'm just trying to make sure that you guys really have it down solid. After you do number 7, I'll do number 5 with you, and then I'll move on to number 8, which is a full cash flow. So Gutierrez Company reported net income of 225,000. You know that's the first line in the operating activities section. For 2014, Gutierrez also reported depreciation expense of 45,000. So there's the non-cash expense, right? Remember the 3 adjustments: add back non-cash expenses, add losses or deduct gains, and then add or subtract the changes in the current assets and current liabilities. So they have a depreciation expense of 45,000 and a loss of 5,000 on disposal of equipment. So we have to adjust for that as well. The comparative balance sheet shows a decrease in accounts receivable of 15,000. You have to decide whether that's added or subtracted based on the rules or based on your understanding. 17,000 increase in accounts payable and a 4,000 decrease in prepaid expenses. Remember, prepaid expenses are current asset. Prepare the operating activities section of the statement of cash flows for 2014. Use the indirect method. The indirect method is the method we've been using all along. So what I'll do here is I'll give you guys, let's say, 10 minutes to do this. It should be more than enough time. If you don't have the paper in front of you, take a picture or something of this question so you have it, because I'm going to go to our previous solutions and put up an example of the operating activity section so people can use it for reference. So 30 seconds to give people an opportunity to take a picture or take notes of the numbers. Okay. And for those who are, busy with other things, or you're tuned out, or you don't feel like doing this, I'm really, imploring you to do these questions, because you're not going to get the statement of cash flows unless you're actually practicing it by yourself as well. All right. So this is not an opportunity to jump onto, social media and faff around there. Please try and do the question. All right. So I will. Let me see. I think this one that we had before, Rojas, is a similar example. I'll leave up this. Remember, you're only doing operating activities. I'll leave this up. I'm going to give you somewhere between 8 and 10 minutes. Let's try and check back in at 11:21, and someone can walk me through the solution. Okay. So you're doing number 7, but I'm putting up the solution for number 3 so you can use it as guidance. And I'm going to take the attendance along while you guys do this.
Professor, there are no non-cash activities in this question, right?
No, it's really just operating activities stuff that we're dealing with. So no,
Saying something about non-cash activity that we have to add it to the operating.
I said non-cash expense, which was depreciation.
Oh, okay, perfect. Thank you.
There's 3 more minutes to go in our time. I'm going to give you a check total. You're looking for net cash provided by operating activities of 311,000. Okay, so check your work. You should have an ending number of 311000. Okay, 3 more minutes. If you don't have that number, try to go back and find your mistakes. All right, so we're at time. Just give me a moment. Just bear with me. I just have to pull up my solution quickly. 1 second. All right, so here we go with the solution. Further question, your net income was 225,000, right? So, I mean, it's okay if you didn't put all the headings and things. I'm less concerned about that. And right now I'm more concerned about making sure that people actually know where the numbers need to go. So 225,000 net income, then you have the adjustments to reconcile net income to net cash provided by operating activities. Adjustment number one is the adding back of the depreciation of 45,000. Then you've got this loss on disposal of equipment. We're basically literally going through, let me just go back to our little cheat sheet slash formulas, whatever you want to call them. Remember, these are the adjustments, right? Add back depreciation expense, non-cash depreciation expense or amortization expense, deduct gains or add losses, because those gains and losses are going to be shown separately in investing or financing activities. So we don't show them in, or we don't have them as part of operating activities. And then you do the increases or decreases for current assets and current liabilities. Excuse me. So 45,000 is your adding back of depreciation. You add back the loss on disposal of the equipment, the 5,000 that they gave you in the question. Then the decrease in accounts receivable means that we collected money from our customers, but that amount is not reflected in net income, so we have to add it back. Decrease in prepaid expenses also means that we have expenses here in net income that weren't actually paid in cash, so we add this back to increase the number. And then increase in accounts payable means that we bought stuff on account and we didn't pay cash, but the expenses are shown in here. So we also added back. So interestingly, all the items that are here were positive. Maybe that, I don't know if that threw you off a little bit, but excuse me, the lesson here is to trust the process, right? Even if it looks weird, right? It looks weird because everything is being added. That was correct. You just have to follow the rules. And so in the end, all of these numbers add up to 86,000. That 86,000 added to the 225,000 is what gets us to the 311,000. Any questions there from anybody regarding how to work out this operating activity section? Excuse me. We good? I'll give a minute here or so for people to just, if you're correcting your work or if you didn't get very far and you need to copy or you want to copy something down. I mean, this whole document is available to you guys. A link is on Blackboard, but if you want to write anything down, you can. I'll give you another 30 seconds to do that. All right, so before we break, I just want to talk about number 5 a little bit. And when we come back from the break, we can do some long cash flow statements, 1 or 2, depending on time. All right. So number 5 is showing T accounts. And I don't know, unfortunately, the underlining, didn't carry, but I may reproduce them in the Excel sheet, I'll see, but I'll talk us through what's being shown here and then what's being asked for. All right. And the reason we're even doing something like this is that often in the statement of cash flows, especially in the additional information, it tells you things about assets that were sold and what their cost was, what the accumulated depreciation was, how much it was sold for. And then you have to remember, and this comes up in the homework also, one of the questions about how do you treat certain transactions in the cash flow. Remember that if there's a sale of an asset, you have to check whether there was a gain or a loss on the sale, right? And the gain or the loss is adjusted for in operating activities, and the actual cash that you receive from the sale will show up in investing activities. I repeat, when you have a sale of an asset, in this case, number 5 is a sale of equipment, you have to look out for two things. One is you look to see whether there's a gain or a loss on the sale, and you'll have to adjust for that gain or loss in operating activities. Remember, you deduct the gain or add the loss. And then 2, you have to know how much cash was actually received on the sale, because that cash amount is what goes in as a cash inflow in investing activities. So part of being able to figure that out is understanding how the journal entry for a disposal, which is the same as a sale or retirement or whatever, how that journal entry runs. And a way to figure that out is also to look at T accounts. And so these are 2 T accounts here, right, for equipment and accumulated depreciation. And what the question is asking is, we'll go over it here. In addition, Luo Company's income statement reported a loss on the disposal of 5,500. So this is the a disposal question. What amount was reported on the statement of cash flows as cash flow from sale of equipment? So basically, this question is asking what amount showed up in investing activities as the cash that was actually received. If you know that there was a sale and you know that there was a loss on the sale, can you calculate the cash, right, that was received? So when we think about a disposal, there's really 3 things that are happening, and I'll write them down. Sorry, this is not the right thing. I'll write them down over here on this workbook. Just 1 second. Okay. So when when we consider let's say to make the journal entry or account for a disposal, we have to look at 3 steps. Or I don't know, I'm not saying this very well, but right. So step 1, proceeds, right, or cash received, and this is going to be a debit. Whatever cash is received will be a debit in the journal entry. Step 2 is you're going to eliminate the cost of the asset being sold. So you will credit the asset, whatever the asset may be. And again, why are we doing this? Because in the statement of cash flows, from time to time, you'll have sales of assets, and you need to understand, if you don't get given all the information that you need to finish up, the operating activity section and the investing activity section, you may be able to reproduce the journal entry related to that sale, so then you can answer the question fully. Okay, so step 2 in a disposal, you eliminate the cost of the asset. You also eliminate accumulated depreciation, right, related to the asset. And this is a debit to accumulated depreciation. And that's because accumulated depreciation is a contra asset. So that normally has a credit balance. So eliminating it, you will have to debit the accumulated depreciation. The third step is that you calculate whether there is a gain or a loss on the disposal, right? So you credit the gain or debit the loss. Okay, that's how you think of gains or losses. And how do you know? So there's a gain if the cash received is greater than book value. And how do you calculate book value? Cost minus accumulated. This is all from chapter 10 from accounting 1. Hopefully, I mean, people normally say they don't remember anything, so that's fine, but you have seen this before. So cash received is greater than book value, then you have a gain, okay? And a loss is obviously if the cash received on the asset, cash received is less than book value. And again, book value is a defined term. It's the cost of the asset, the cost over year minus the accumulated depreciation. That's, you can find these numbers find the book value numbers in the question or in, step 2. So, so that's those are the steps that you engage in when you're looking at a disposal. So in this question, they give us the T accounts, and we can see that there's a beginning balance for equipment of 80,000. We don't have to do anything with that. They tell us that they bought some equipment for 41,600, and then this disposal, this is a sale of the equipment. So this is the cost of the equipment being credited, right, to the equipment account. This is the amount that they're removing related to this equipment that was sold, right, at a loss. Then you've got accumulated depreciation of 5,500, right? So this depreciation expense and so on is not relevant for the sale that we're trying to talk about. So basically what they've done is they've given us parts of the journal entry. 2 parts are shown in a T account, and this one part over here about the loss is just discussed. So we can actually recreate the journal entry using this information, and I'll show you how. So we don't know what the cash is because that was what they asked us for, right? If you go back to the question, it says, what is the cash flow from the sale of equipment? We don't know, and that's fine. We just follow the steps. We know that the first step in this journal entry is that we would debit cash. We don't know what that debit is going to be. The second step, and if we want to keep the debits and credits to, in the same line, is that we will debit accumulated depreciation, right? And if you go and look at the question, you see that the disposal, the accumulated depreciation related to the sale or the disposal is 5,500. So you're not going to use the beginning balance or the depreciation expense or the ending balance. You're specifically looking at the accumulated depreciation related to the sale, which they give you as 5,500. So I'm going to put that into my answer. Furthermore, I'm told that there's also a loss on disposal of 5,500. So that means that I can actually populate. Remember, a loss is a debit, right? From here, debit the loss. So I can move on to step 3 and say, there's a loss on disposal. So that's another, these numbers are, it's just coincidence that these numbers are the same. Okay, they're not related to each other. So a loss on disposal of 5,500. So what haven't I done? I still don't know how much the cash is. That's fine. That's what I need to solve for. I haven't yet credited the asset for its balance, but I've done everything else. So I still just need to take out the equipment of 22,000, the sale of that equipment. So I'm going to credit the equipment for 22,000. Now what I can do is I can say, okay, I've got 22,000 on the credit. I know that the dollar amounts of debits and credits need to match, right? So, so I'm going to say 22,000, right? And just solve for it, right? 22,000 and subtract the other 2 numbers to get to the cash amount. And you can probably already predict what it's going to be. So 11,000 is the cash that amount that will show up in the cash flow statement as cash flows from. So this is going to be cash flow from the sale of equipment. In the cash flow, you'll probably just write it as sale of equipment, but I'm just showing that this is the answer that we were looking for. Questions there? Okay, so let it sink in. Again, what's the point? Why are we doing this? It's because we need to make sure that we understand when there's a sale of an asset that there's a loss or gain that will be adjusted for in operating activities, but there's also a cash amount that we need to have available to us, whether it's given in the question or we have to solve for it in investing and financing activities. And in order to get either the cash amount, or maybe you have to solve for the loss amount, or you have to do something like yesterday we solved for the loss or not yesterday, sorry, when we were together before on Thursday, we solved for the loss when we had that land that was sold for $6,000. But you have to be comfortable with the fact that these are the 3 steps basically that are involved in a sale, and that you can basically recreate the journal entry related to the sale and find the information that you need. Before we break here, I just want to make sure that I'm not missing anybody who's actually here. I've got everybody's attendance, but there's a few people who I think are not here today. So I'm just going to call out their names, and if they're not here, obviously no one will respond. So is Wen here? Wen Chen? Okay, Jahomi, Christina, Walter, and Courtney. All right, everybody else. Oh, sorry, and Lewis Tavares. Lewis, are you here? So everybody else, I have your attendance. It's 11:38. Let's come back at 11:48, and then we'll do another cash flow together. All right, so 11:48 is the end of the break.
Professor, just to let you know, you're still sharing your screen.
Thanks. You probably don't want to see all my emails.
No, I just didn't know if it was anything personal or not, so I just wanted to
No,
let you
but
know.
I appreciate it. It's nothing personal, but I appreciate you. How are you doing, by the way? Are you better now?
I'm recovering slowly. I still got therapy, and they're still like dealing with this concussion. 'Cause I still get the off and on headaches,
Oh my
but it's
word.
like it's decreasing though. It's the headaches are mild now, so
Okay.
yeah. It's
Okay.
just more the usually like I've never really paid attention to how much like goes into recovery. So it's
Yeah.
like I have to
Yeah.
cut down on work. I'm trying to catch up in one more of my other class as well,
Yeah.
just because I have to spend so much time there to get myself fully back on my feet.
Wow. Such massive implications, from this lady making a stupid, what was it, U-turn or whatever. My goodness. I'm so
I,
sorry.
I appreciate it. Don't worry though. People make
You're taking it
mistakes.
in stride. No, I know. I'm not even, it's not so much like I'm not wishing ill upon her. I'm just saying like the split second decisions that we sometimes make as human beings, when something happens as a result, it can have such massive implications, when you just do something maybe without thinking it through.
It would have been a lot worse if I didn't react the way how I reacted. If it
Yeah,
wasn't
so
for
you
my driving skills and paying attention,
exactly,
it would have been a lot
exactly.
worse.
And you've got the right attitude that you actually escaped relatively well from what could have happened. hmm hmm Yeah, well, a concussion is nothing small to deal with. So I hope that that gets resolved because I mean that also impacts like to some extent how your memory and things work. So it sucks that it has to happen now in the middle of, or you're still dealing with this during your schoolwork as well.
And that's a lot more harder, I'm not gonna lie.
Mm-hmm. Mm-hmm. How many classes are you in this semester?
Five. Took
Oh,
5 classes.
okay.
Yeah.
Okay, then. All right. That's a lot.
I
So,
know.
mhm, yeah.
I have goals though. I
No,
gotta
you gotta, I mean,
set
we all
time
gotta
limits for certain
hustle. I
things.
get it. We gotta hustle. It's just that, now the temperature's been turned up on everything. If you're struggling with your recovery and you have so many classes to navigate.
So, well, most of them is online courses, so it's like it's not like I have to go into campus right now. So, and then
Mm,
I explained to most of my professors about the incident. Those that have like fallen behind it, I let them know what happened. They were very lenient about a lot of stuff. So,
okay. Okay. That's good. And then, I mean, if you are giving you just have to give the medical note or whatever, so they can, I mean, even
yeah,
with me.
I got one of my doctors working on my medical notes just to give to the professors. So
Okay, all
his
right,
card and everything, so you guys could feel free to contact him if needed.
all right.
Professor, if we have bond payable in the balance sheet, is it supposed to be financing activity?
Yeah, anything you mean if there's some type of transaction related to bond payable?
Uh-huh.
Is that
In the
yeah,
balance sheet.
a bond payable is going to be financing activities unless there was a gain or a loss. Like, let's say you retired a bond before maturity, and there's a gain or a loss. The gain or the loss will be adjusted for in operating activities, but the actual cash related to the transaction is financing.
So if at the beginning of the year it was 149,000 and then at the end of the year it was 114, there is a loss. So it will be in the operating activity and the financing activity? I don't
No, there's not
understand.
necessarily a loss if it's going from did you say 149 to 114?
Yeah,
Yeah, that just means that they probably repaid the bond. And so it's just all in financing activities as a cash outflow. It would only be like it's a very special type of question that is actually going to say, oh, this bond was, was repaid before maturity. And there's also, they would have to tell you in additional information if there was also a loss related to, and if there's nothing like that said, then it's just a straight payment of the bond.
okay.
It's
I'm
going to
just,
be debit, bonds payable, credit, cash, and so all of it goes into financing activities as an outflow.
okay, perfect.
Okay.
And-
All right. So we start back up. I just want these things come across my desk, and I just want to make sure that, I mean, you guys probably see it in your email. If you check your email, I mean, everyone's, I think, so overwhelmed by information that comes from all over the show. So I just wanted to share that LaGuardia Cares, in conjunction with Food Bank, with the Food Bank of New York City, is having a pop-up pantry tomorrow, Wednesday, November the 17th, from 12 to 2. That's really going to be curbside at close to where the actual LaGuardia Cares office is. So it's 2910 Thompson Avenue. It's the C building on the curb. If you are around on campus, or if you happen to be in the vicinity at that time, you can literally just go by. I don't know if they're going to have bags themselves. They usually do, but or just bring your own bag and you can basically go and get some food. So normally it's like non-perishable items, but sometimes they even have fresh produce and stuff. So please go if you are around, because these things are funded, and if people don't don't make use of them, then they end up not being able to justify the funding. And if you're not on campus, but friends who are there or whatever, go. You need to be masked, even though it's on the curb. I think it's they're interacting with people less than 6 feet away, and it's outside, so I'm assuming they're not asking for vaccination records. So just have a mask with you and show up and get some food, get some free food. Again, these foods are funded by food drives, and people donate and so on. So you want to take advantage. If you could be living alone and you have a food budget, maybe you can save something on your food budget. Or if you need food, or you have a family member who's in need, or someone that it's open to all LaGuardia students and their families. All right, so that's tomorrow. Then the other thing that I wanted to tell you, and this is me as usual with my with my trying to warn people about stuff. So please don't shoot the messenger. This is from the provost of the college. You probably got this already. Just a reminder, we spoke about spring 1, but we didn't speak a lot about fall 2 in this class. If you registered for class in fall 2, and if it's in person or hybrid, but let's say you've been online for all your classes in fall 1, so you're like, I don't have to upload my vaccination documents, or I don't need to get vaccinated because I'm going to be online forever and ever. But suddenly now you look back at your schedule and you realize that actually starting on January the 3rd, you have a class that's meeting in person or hybrid. You will not be allowed to attend the class and go onto the campus unless you have uploaded your vaccination documentation. All right. So even if you're online right now, if you know that you're going to be in person or hybrid in fall 2, they're actually sending out this warning, right, that came today, to please be sure that you upload your stuff, and you don't want to be getting an administrative withdrawal for not for not being vaccinated when you are vaccinated, but you haven't uploaded your stuff. Again, if you're fully online for fall 2, it doesn't matter, but please check your schedule, because you may find that you do actually have a hybrid class, which means it meets at least one session on campus. And then if you are unvaccinated and you are still wanting to be vaccinated, and you do have classes that are in person or hybrid starting in fall 2, this Friday, November the 19th, is when you have to get your first shot in order to qualify to be fully vaccinated, and you have to get the second by December the 10th in order to qualify to be fully vaccinated, because the deadline for uploading proof is December the 11th. And I think you just do Pfizer or Johnson & Johnson. Johnson & Johnson is one shot. Pfizer, you can go quicker between shots than Moderna. If you are not vaccinated yet at this point, it's no use going for Moderna, he's saying, because you won't be able to get the second shot in time in order to be fully vaccinated by the deadline for upload, which is December 11th. If you have questions, if you suddenly realize that this applies to you and you don't know what's going on or whatever, speak to me, okay? I can help you. If you need help, I'm happy to help. All right, so that's all I'll say about, that's all I'll say about the vaccine stuff. It's just that it keeps coming up, and I don't know if people are thinking carefully about what their situation is for fall 2, right? That's the question now. So let me see, trying to minimize this thing, but I don't know if I'm probably missing something. Anyway, so we did number 5, and the next question that we'll do is 8. For those who have the handout, 8 is obviously on the handout. I just wanted to show people who maybe don't have the handout but are in Wiley that it's also in the textbook as problem 1711 that I'm busy doing, but it's a little bit squished up here. I thought that I could minimize this. Let me see. Nope. Okay. This is the question. So if you want to go into the textbook at 1711, I'll just work off of the handout information. So this is a much bigger question than we've done up to now. I'm going to work it through with you. I'll discuss everything excuse me, that we need to do, and we'll get through it, right? So the company Roethlisberger, they have their comparative balance sheets, meaning 2 years of balance sheets, December 31, 2019 and 2020. All right, you can see that the cash balance goes from 45,000 to start with, and it goes to 81,000. So already you'll know that the increase in cash for the year is 36,000, right? And the statement of cash flows is what we're going to use to explain how that increase came about, right? Through operating, investing, and financing activities. You already know by looking at the balance sheet that the ending balance on your statement of cash flows needs to be 81,000, all right? Here you have your current assets, accounts receivable, inventory, and prepaid expenses. We'll work through the changes in those numbers when we start doing the operating activity section. There's land. You can see that there's been a decrease in land. So most likely some land was sold during the year, and we'll see if we have any additional information about that. Buildings, the numbers stayed the same, right? So probably there's no activity, but we need to see if there is any activity. And then you've got accumulated depreciation on the buildings increased by 20,000. So probably that's going to be part of our depreciation expense. But we also have another depreciable asset in equipment. So we need to make sure we know what's happening with depreciation there as well. This equipment went up. The balance went up, so there was probably a purchase, but there may have been a purchase and a sale. So we'll have to look at that carefully. There's your total balance for assets for the 2 years. Questions so far? I'm just walking through the balance sheet. All right. Then liabilities and stockholders' equity, we have accounts payable. The balance went up by just over $7,000. Then you've got bonds payable. The balance went down by $40,000. So you'll have to see whether this was a cash transaction or if something else happened. You have common stock where the balance went up by $40,000. So maybe bonds were exchanged for stock. We'll have to look at that. And then you've got retained earnings that went up by, just whatever it is, 22,000. We don't have a line item for retained earnings in the cash flow, but we do need to see if any dividends were paid. The dividends are usually paid out of retained earnings. All right. So here's the additional information. Operating expenses include depreciation expense of 42,000. So thank goodness they actually told us the depreciation expense amount, because we may not have come to the same amount just by looking at the changes in these two balances, right? And we definitely would not have. So there's our depreciation expense for the first adjustment to net income. Prepaid expenses were charged to net income also for 5,720. That change is really they're just talking about the amount by which prepaid expenses went down. We already know how to deal with that because it's part of the changes in current assets. So for this piece, this is almost like extra information that you didn't really need, because you have to calculate the change in prepaid expenses. Then it says land was sold for cash at book value. So book value for land is just cost, because there's no accumulated depreciation for land. So there's no gain or loss on the sale. So if we go back and we look at land, that means we sold land worth $25,000 for $25,000 cash. All right. So there's no gain or loss that we have to adjust for as it relates to land in our operating activity section. We just have to account for the sale of land in investing activities. Again, no gain or loss. Book value for land is the same as cost. And this is just notes that I've had here from before when I was going through the questions. So you can copy them down yourself if you want to. Cash dividends of 20,000 were paid. All right. So there's your dividend amount. You don't have to worry about doing anything with retained earnings to figure out dividends. It's the numbers given to you. And we know that this is a financing outflow. All right. So that's going to go into the financing activities section. Remember, land goes into investing activities. Net income was 42,000. So annoyingly, they gave you a net income number that's the same as the depreciation expense number. That doesn't mean anything. They're not the same number or somehow related. Depreciation is just an expense that would have been deducted to get to net income. So anyway, 42,000 will be the starting line on your statement of cash flows. And then equipment was purchased for 88,000. So a purchase of equipment is going to be a cash outflow in investing activities. All right. I don't know that we have done an example yet where we purchased an asset. I can't remember. We may have, but the point is I'll show you how to do it. It's just going to be a minus under investing activities. In addition, equipment costing 22,000 with a book value of 10,000. All right, so the book value is cost minus accumulated depreciation, was sold for 6,000 cash. So remember what we just said about book value and cash, right? The cash that you received is 6,000. So if we go back to these rules that we had, cash received is 6,000. The book value is 10,000. So there's a loss on this transaction, because what you received for the asset, right, is less than what you were carrying it at in your books. And I wrote it down here. If cash received is less than book value, there's a loss. Cash is 6,000. The book value is 10,000. So there's a $4,000 loss on the sale transaction. We know that a loss is going to be adjusted for in the operating activity section. So you can see now why you want to be really systematic when you're doing a statement of cash flows, because there's information being given in all different ways in different parts of the question. And so when you think about those three adjustments to net income, you're looking for a depreciation number, you're looking to see if there's any gains and losses, and you're looking for those changes in current assets and current liabilities. Some of the information you have to calculate along the way. Yes, confusing and difficult. Remember, I said it's difficult because you're using a lot of parts of accounting that you've learned elsewhere that you have to bring and try to apply, right? So I'm showing you guys, we're spending multiple sessions on this because I'm showing you how to solve for these things. If I may say, this setup here that I gave you over here is incredibly helpful because you can basically use this type of thinking to solve any of these questions where there's a sale with a gain or a loss. So again, you need to know the definition of book value, cost minus accumulated depreciation, to understand what this means. And then you have to know that to calculate a gain or a loss, it's the difference between the cash that you received and the book value of the asset, not the cost of the asset, the book value. Okay, so there's some work that you guys also have to do. You'll be confused for a very long time if you don't do your own reading and studying to memorize what certain things mean. Otherwise, it will just always stay hard. If cash received is greater than book value, there's a gain, but we know that there's no gain here, so we're not going to worry about that for now. Bonds were converted at face value by issuing 40,000 shares of $1 par value common stock. So you said debit bonds, credit common stock, that is a non-cash activity, all right? Because there's no cash. You didn't pay the bonds in cash. You didn't issue stock for cash. You basically swapped out bonds for common stock. So it's a non-cash financing activity, and it won't even appear in the financing activities section of the statement of cash flows. You'll show it at the bottom of the cash flow as a non-cash financing activity, and I'll show you how to do that. So again, going through each of these items, you have to figure out, where does this item belong on the cash flow? And is it a cash inflow or outflow, so that when you actually start the cash flow, the statement of cash flows, you at least have some idea of what belongs where. And then obviously it's saying to prepare a statement of cash flows for December 31, 2020 using the indirect method. Again, that's the same method we've been using all along. And then there's a check total here for you that cash flow from operating activities should be 113,000. All right. So, so what do we know, right? Where would we start in a question like this? Just be systematic, right? Just go through things item by item. So I'm going to go over here. This is exercise 8. And I'll work it through with you so that you can see how I'm pulling the information from the question. So Roethlisberger Company statement of cash flows, right? For the year ended, remember it's for a period of time, December 31, 2020. Okay, and we already know, based on what we saw on the balance sheet, we already know that the ending balance on this cash flow needs to be $81,000, right? At least we know that much. So we start with cash flows from operating activities. It's always the same setup here from the beginning, right? Cash flows from operating activities is the first section of the cash flow. And then from before also, because we've done this before, that after that you're going to put in your net income, because that's how the indirect method works. You're putting net income at 42,000, right? And the 42,000, again, hopefully this is, I'm like a stuck record now, but hopefully this is not news. That's the 42,000. I got it from the question. Okay, so that's the starting point. Then you're going to talk, this will be given to you in Wiley, but I still have to write it out. Adjustments to reconcile net income to net cash provided by operating activities. So what we're saying again is net income is on an accrual basis where we record revenue and expense as they happen. We don't care if there was actually cash received or paid. But net cash provided by operating activities tells us the actual cash that we generated, right? Not the profit that we generated, the actual cash that we generated. Okay, so We have our net income. Now we're looking for depreciation or amortization. We know that the depreciation expense is 42,000. There's no amortization expense as a non-cash expense in this question. So that's adjustment number one, right? Is depreciation expense. And again, you know, for whatever silly reason, the book decided to make both of these numbers the same. They are not the same for any strange reason. It's just coincidence. All right. So depreciation expense, 42,000, adjustment number one. Adjustment number two says add any losses and deduct any gains that relate to investing or financing activities. So I'm going back and remind myself that there's no gain or loss on the land because it was sold for cost, but there is a loss on the equipment, right? And the loss on the equipment is $4,000. So a loss on sale based on the rules has to be added back. Right? And how do we know that? I'll just bore you to tears by going back to this all highlighted in yellow cheat sheet. Here's the adjustments. Deduct gains and add losses that resulted from investing and financing activities. Example, a gain or loss on sale of equipment. This is done because investing and financing activities are dealt with elsewhere on the cash flow. So we will add back the loss of 4,000. For the equipment, there is no loss or gain on the land, so we don't have to worry about that. Loss on sale of equipment, 4,000. Add, right? Because it was already subtracted to get to the net income number. So we need to add it back now so that we can make the impact of the loss 0. Okay, now you come to adjustment number 3, which is the decrease and increases in all of the current assets and current liabilities. So we have to do a little bit of calculation, and you want to be sure that you are careful with your calculations so that you don't make a silly mistake in the calculations and end up, you know, struggling to fix the cash flow, but finding that you can't because there's a calculation somewhere here that you flew through too quickly, and now you can't figure out what your error is. So accounts receivable went down. It went down by 21,000. All right. So I'm just going to do them one by one so we can make sure that we found everything. So there's a decrease in accounts receivable. Remember, you don't include the increase or decrease in cash. I just want to be clear here. Do not take the change in cash as part of these adjustments. It's the change in cash that is the purpose of the whole statement of cash flows. You're only looking at non-cash current assets, right? So a decrease in accounts receivable of 21,000. If you go back to the rules, you will see that a decrease in a current asset, you are going to add back. And the reason we add this back is a decrease in accounts receivable means that we collected cash from our customers, and we collected cash that basically we had not accounted for in net income. So the number has to increase for that cash collection. All right. Inventory went up, right? So inventory went up. If you do the math here, inventory went up by 9,450, right? So again, it's inventory is a current asset. Part of, again, what makes the statement of cash flows a little bit more difficult to do is you also have to know now what qualifies as a current asset and current liability. Inventory is definitely a current asset. Went up by 9,450. So the increase in inventory is going to have the opposite effect, right, as a decrease in accounts receivable. If they're both current assets, then, you know, the one going up and one going down, they're going to move in different directions. So that's a negative. And I mean, I'm going to say this quickly because not everybody cares, but the reason an increase in inventory is a subtraction is that cost of goods sold is included in net income as an expense, and it would have been subtracted, but that only relates to what was actually expensed for the year. But because the inventory balance went up, it means that we purchased additional inventory that we didn't sell, and we paid cash for that inventory, and therefore we have to subtract the amount because it's not, this additional purchase of inventory is not accounted for in net income. right? And if you're like, what? You don't care, just go back to Old Faithful, right? What happens if there is a decrease in a current asset, right? That's what you ask yourself. A decrease in a current asset, sorry, that was an increase. An increase in a current asset you deduct, right? So the increase in inventory you will subtract, the decrease in accounts receivable you will add. Just go back to that sheet and follow the rules if you truly are having difficulty understanding the logic. I understand and I sympathize. Okay. So increasing inventory subtraction. Here goes prepaid expenses. Prepaid expenses went down. So that's a decrease in prepaid expenses. All the prepaid expenses is also a current asset. Right, so if you look at the change in the number, it's 5,720, which is the same number that they mention in additional information, right? 5,720. So don't get confused. They're just giving you extra information, which isn't really even that helpful. So 5,720, it's the same movement as accounts receivable, so it should be added. And then we're done with the changes in the current assets. Land is not a current asset. It's a long-term right situation. So is buildings and equipment. These are depreciable assets that we're going to be holding for more than 1 year. So you're not going to take the changes in those. You'll look at that for investing activities. All right. As it relates to current liabilities, only accounts payable is a current liability. A bonds payable is not a current liability, okay? Unless for some reason they tell you that it is, you can assume that it's long-term. So accounts payable does have a change. It's an increase of 7,730. So we're going to put that in, increase in accounts payable. And again, following the rules, right, an increase in a current liability is added. And if you want to think about logic, why is it added? If you bought stuff or you had expenses and things in your income statement, but you didn't actually pay cash for it, that means you kept cash in your wallet, but the expense was deducted over years. So you have to make that, you have to adjust for the fact that some of the expenses in net income were never paid for in cash. And so you actually have more cash on hand than the net income would show. Okay. And so now we're done. Remember, I told you that bonds payable is not a current liability, so we don't have any more current liabilities to deal with. You now add and subtract these items. There's only one of them that's a subtraction. So once you add and subtract everything, you see that the total is 71,000. And then that 42,000 and the 71,000 together are going to give you that check total that we had, which was 113,000. So I'm going to let this sit here for a minute and people can copy if they need to copy. But the bigger reason I want to give the breathing room is for questions, if anybody has questions on this. So let it simmer for a minute here and ask me any questions, or if you want me to repeat the explanation of any part of this. All right, so I don't see any questions in the chat and I'm not hearing anyone asking me anything. So think about, you're welcome at any point to stop me and ask questions, but think about what we've done up to now, and I'm going to move on to the investing activity section. Okay, so this is cash flows from investing activities. All right. So remember, this has got to do with that sale of land that we had, the sale of the equipment, and the question also told us that there was a purchase of equipment. So we need to take all of this into consideration. So the sale of the land at book value, equipment was purchased for 88,000, and then there was also a sale of equipment. And remember what I told you for the investing activity section. When it comes to the amount that you have to use, it's not the cost of the equipment or the book value that you put in as the amount there. It's the actual cash that you received, right? That is going to be, all of this is about the cash that flowed when you look at investing and financing activities. So for land, it's a 25,000 change. So the amount that you are going to put into your cash flow is 25,000, right? It's a sale of land. And for those who care, which might be no one at this point, but I'll just show you the way this would have looked as a journal entry is debit cash for 25,000. Actually, let me move this across. Debit cash for 25,000 and credit land, right? For 25,000. That's the journal entry. So the cash is 25,000. You've got the sale of land, and then you also have the sale of equipment. And the sale of equipment, again, $6,000, right? That's what you're putting into the journal entry, $6,000. Not the journal entry, sorry, into the statement of cash flows. So that's the cash that you received. So 6,000 goes in here. And then for the purchase, for the purchase of the equipment, you can just pull the number over here. It's 88,000. But remember, when you buy something, you are paying cash. So this is also mistakes that people make quite often, right? That when they think, oh, but I purchased something, so now I have more of that thing. Yes, you have more equipment, but we're talking about what happened to cash. Cash went down, right? So a purchase of an asset is a cash outflow. A sale of an asset is a cash inflow, right? Just think about what's happening to cash. Sorry. If I think about this equipment journal entry, right? It's going to be equipment debit, 88,000. And it's going to be cash credit for the same. So this credit to cash means cash is going down, and that's why you've got a negative number over there. And so with this, you're also just adding everything together, and it's coming out to 57,000 positive, right? Because, sorry, not positive, negative. What am I talking about? 57,000 negative. Because the 88,000 is much bigger than the other two numbers. And this now, because it's negative, is net cash used by investing activities, not provided by. I'm just highlighting this again in case of any niggles in Wiley where they suddenly tell you your answer is wrong and you're like, but this is net cash for investing, but maybe they're just looking for used by. Let me just repeat, the land was sold at cost. So that meant you received 25,000 for land that was worth 25,000. That's a cash inflow because you're selling something and receiving cash. So it's plus 25,000. The equipment, they tell you it was sold for 6,000. It doesn't matter that the book value is 10,000. It doesn't matter that we had this 4,000 loss. Those are not the numbers that you show. You show the actual cash that was collected. So $6,000 coming in because you sold. The purchase of the equipment, the number is given in the question, 88,000, so it's a negative, and then also the 25,000 plus 6,000 minus 88,000 gets us to minus 57,000, which as a result is referred to as cash used by investing activities, not provided by. So I'll give a minute here for this to simmer and settle and take any questions that anyone may have. Okay, last piece, cash flows from financing activities. And remember, yeah, it's all the stuff to do with issuing stock or issuing bonds, buying back stock, repaying bonds, paying dividends, all those things are under financing activities. So if we go back to the question now to see what was financing, we've got a payment of a 20,000 dividend. That's a cash outflow under financing activities. Remember, we did have a change, right? This $40,000 change in bonds payable and also this change in stock, but that was a non-cash activity because it said that the bonds were swapped for stock. So that's not going to go into the financing activities section on the statement of cash flows. It will go as a separate discussion at the end of the cash flow. Retained earnings, you do not take the changes in this number and put it into the cash flow. It's not a cash change at all, okay? So it turns out that the only thing that we need to put into financing activities will be the payment of the dividend. So 20,000 negative, right? And then this is that's it, okay? Then this is gonna be net cash again used by, because it's a negative number, financing activities. Just reminding you. And so this, it's a little bit silly because it's just one number, but I'll just follow the trend that we've had of doing subtotals and so on, because you still have to show what the number is and then show the subtotal of you, or I guess the total of net cash used by financing activities. That's it. I'll show you in a second here when we finish the cash flow, how we deal with the conversion of the bonds. So now we've done the operating activities, investing and financing activities. The next step is to add and subtract these three numbers, right? Remember A, B, and C. To add and subtract A, B, and C to get us to the net increase or decrease. We already know it's an increase in cash during the year because we know that the number, without even doing our additions of A, B, and C, we know that the number is the difference between the cash at the end of the year and the cash at the beginning of the year. Where am I getting this from? To remind you, it's in the balance sheet, right? The 2019 ending cash is 2020 beginning cash. So 45,000 is what we started with, 81,000 is what we end with. So the increase in cash should be 36,000, right? It's going to be, I'll just put plus, although some of the numbers are negative. It's A plus B plus C. So let's see if we actually end up with 36,000. I mean, you can try to force the number, but if the math doesn't work out, it means you made a mistake somewhere. Okay, I don't need this dollar sign, so I'm just trying to get rid of it. So A plus B plus C does give you 36,000, but again, don't just type the number in when you do your homework and so on, because you have to check that your math actually is working out. You can't force balance the cash flow. So the net increase in cash is 36,000. Then the next step is cash at the beginning of the year, because remember, you're trying to get to cash at the end of the year. Sometimes they say at the beginning of the period. Also, it's, in the examples, it's the same thing. In this case, the period is a year. So cash at the beginning of the year. And now this is the final line that we're looking for, right? Cash at the end of the year. This is what this should be, is 81,000, because that's what's on the balance sheet as well. So we know that we did this right because we end up at 81,000. That's your check of your work. And then what happens now with the bonds and the stock, that were converted, you're going to write non-cash. I think it's just one word in the book. Non-cash investing and financing activities. It's a heading at the bottom of the cash flow. So you can make it look like that. And then remember, this is related to, I'll just go to the additional information. This is related to this number 6 here. Bonds were converted at face value by issuing 40,000 shares of $1 par value common stock. So the dollar amount is 40,000, and it's a conversion of bonds to stock, right? Conversion of bonds to common stock. And the amount is 40,000. Why do we have to do that? Because someone looking at the balance sheet can say, hey, I can see that your bond number went down by 40,000 and your stock number went up by 40,000, but I don't see that reflected anywhere in the financing activities. And then you can say, well, it shouldn't be reflected in the financing activities, which is why we're putting it as a note at the end to explain that it wasn't a cash transaction. And the way this journal entry would have looked for anyone who cares, which may be only me, bonds payable 40,000, right? And common stock credit 40,000. So there's no cash involved in the transaction. And that concludes the statement of cash flows. This was problem 17-11 in the textbook if you wanted to go back and look at it there, but I've obviously replicated it as exercise 8 in our work here. I'm going to give you again a minute or two to just fix your papers if you're writing stuff down, or look at the answer, look at the whole thing, see if you have questions for me before we do anything else. Okay, so we're done. I provisioned for an example that you guys could do on your own, but it's never going to get done in 15 minutes. So, looking at the calendar, we still have some slack in our time. So what I'll do is on Thursday, I will start us off with an example for you guys to do. For me, it was more important right now to go slower through this example and make sure that people are following. So I'll start us off with a cash flow example, and then we'll move straight into chapter 18 on Thursday. And chapter 18 is the last chapter that we have to cover. And I don't know that, I just want to say this again. I hope people remember this. There's this weird situation on Tuesday, the 23rd, where it's in life, in reality, it's a Tuesday, but at LaGuardia, a Thursday schedule. So all your Thursday classes are going to be running on the 23rd. I mentioned this sometime back. I'm mentioning it again because we are a week out. And I know that some people obviously are working, and maybe you work, on, let me just think this through. Maybe you usually work on Thursdays, and there's going to be a problem because I'm not saying this the right way around. Maybe you usually work on Tuesdays. Now I'm right. Maybe you usually work on Tuesdays, but because we now have a Thursday schedule running on a Tuesday, you just want to make sure that there isn't a problem with your work, your shifts or whatever at work. I don't know everybody's situation. Maybe this doesn't apply to you, but it's a little bit weird. So we always meet because we meet Tuesday, Thursday at the same time. But on the 23rd, all your Thursday classes are going to meet to make up for Thanksgiving when there's no class. So just be aware of that, and don't get caught, like mark your calendar, don't get caught unawares. Or the other thing that will be weird is like you forget that it's a Thursday schedule and you are available, but you don't log into one of your classes because you just didn't remember that the schedule was different. Okay, so please mark your calendars to make sure that you know that it's a Thursday schedule. And then on that same day, the chapter 17 homework is due at 6 p.m. And so that's also part of why I'm emphasizing this, because if you do have a whole heap of classes on a Thursday and you think that you can do all the homework on Tuesday, that's not gonna work out, okay? Because you'll end up in all your Thursday classes. If you're ever worried about what's going on with the calendar, or you feel like you're not gonna be able to remember what I just said, just go to the academic calendar online, and you'll see this is what I'm talking about, okay? That the 23rd is an irregular day. Everything is a Thursday schedule. So our homework for chapter, sorry, I'm on the wrong thing. Our homework for chapter 17 is due that day. It's still due at 6 p.m. Please start doing the homework as soon as possible so you don't run into problems. And then for the last 5 minutes or so that I'll have you, I just wanted to talk a little bit about the test and the quiz. That's opening also on the same day, on Tuesday, the 23rd, which is now Thursday. According to LaGuardia, and it will close on the 30th. So you have that usual 1 week window. All the same stuff applies, that, it's timed, and you want to make sure that when you start doing the quiz and the test that you have proper internet, that you have the time available you're supposed to be taking, and you have to study. All right. This is, this is not something that you can kind of just say, oh, I'm going to look in my notes and I'll be fine. That's not the case. All right. So as I said, the clock does not stop. It doesn't matter what you do. If there's a crash, internet outage going in and out, on Wiley's side, the clock just keeps running. So the quiz is 3%, the test is 15% of your grade. It starts on Tuesday, November the 23rd at 9 a.m. And you have a 1 week window until November the 30th at 6 p.m. to complete it. I always tell you to do the quiz first so that you can just get an idea of how you are going, right? We're covering 15 and 17. The quiz, as usual, is 10 multiple choice questions. It's going to be calculations, journal entry, maybe a little bit of theory, but the focus is more on calculations and journal entries and stuff, because I'm actually trying to make sure that you understand how to do the calculations for the exercises that are coming up in the test. You have 2 hours. It's the usual thing, 3 attempts, but your point potential will drop to 60% after the 3rd attempt, because it's only 4, A, B, C, or D. So if you're just doing, at some point, people will have to be penalized for just doing, guessing. And so that's why the point potential drops so much by the 3rd attempt. And then the test itself, again, 10 multiple choice questions, also a combination of theory, journal entries, and calculations, and 6 exercises. Remember, we've been through this, that you have 4 attempts. There are supports that come up after each attempt, but you don't have to choose them. You don't have to choose, in like any of the supports. You can still get 100%. I mean, no one is forcing you to accept the supports that come up. The exercises, bond issuance at face value with interest payment and interest accrual. One of your classmates asked me to write the exercises next to these things, like class exercises and homework. I'll try and see if I can do that. But this is the first thing that we ever did with bonds. And it comes up all the time. Bond issuance at a discount, bond issuance at a premium, bond redemption at and before maturity, journal entries for the mortgage payable. I'm writing mortgage note here. I'll see if I can change it to mortgage payable. It's the same thing, but I'll stick with the language in the book. And the first two installments, so this is talking about the amortization table. And then there is a full statement of cash flows. Okay, I just put the questions in the order that we covered the material in class. I'm not specifically putting the cash flow at the end to trip anybody up. But what I have found with this test is that people spend ages on all the bond stuff, trying to get everything correct. And then when it comes to time to do the cash flow, they're not giving themselves enough time to do it. You saw how long it took me. The cash flow that I'm giving you is not on the level of the one I just did. I think it's less somewhat less intense, but it does cover, you know, the material that we've dealt with up to now. I just want to be clear that you know, there's a lot of points attached to that cash flow. So you leaving yourself 20 minutes at the end to try and get through the cash flow, that's not wise. Okay, you have 4 hours. Someone who studies properly for this test should be able to finish it easily within 3 hours. Okay, if you are not finishing the test within 4 hours and you only have a few minutes to do the cash flow, it means that you didn't really study, right? That you're looking through your notes and your you know, your homeworks and stuff to try and find the answers. You have to study. Okay, just please study, because again, as I said, I find that a lot of people at the end of a year, because they were paging, I guess, through books and trying to find answers and stuff to these first few questions, when they come to the cash flow, they're just so out of time that they're losing like something like 30% of the exam points. And then if everything else isn't perfect, you're in the 60-something% range for you know, for the test. So study, set time aside to do that. Be strategic about when you choose to take the test. Don't do it, you know, on Thanksgiving after a massive meal and with your family all around, and now you've decided you're going to take the test. I mean, if you celebrate Thanksgiving or at some time when you're exhausted from work or something, try and just find a time when you can do it when you're a little bit more fresh and you are managing your time appropriately. I know that the system gives you a clock. It shows you how the time is going. So please be aware of that. Yes, Shafak.
Yeah, Professor, I just wanted to know if we run out of time before we could submit our paper, would it save the changes, save the answers that we entered, or would it just disappear?
Oh, so if you will, anything that is saved will generally auto submit. But if you were busy working on something and you didn't save it and the time goes, you know, the time runs out, or the actual deadline passes and now it's late, then that's a different story. So I think what I'm hearing you say is, let's say it's like 5:45 on the day of, you know, on November the 30th, and you're still busy doing something, and you know, the clock hit 6 o'clock and auto submit, which is what the system does. The system auto submits your work. Is anything that was still in progress being submitted? No, it has to be saved in order for it to be submitted. Because if I even see this when people ask me to check their work sometimes and they didn't save their work, it's just a blank for me. I can't see anything. So Wiley's the same. Unless you save as you go along, there's nothing for them to submit.
Right. Okay. Thank you, Professor.
So be careful. That's a good question that Shafak is asking. If you see that you're getting really close to to 6 o'clock. I mean, I hope no one's going to leave it this late, but people do sometimes. You're getting really close to the deadline, or you're getting close to the end of the time window, right? You're getting close to the end of the 4 hours. You are better off spending the last 5 to 10 minutes making sure that you saved stuff that you are just working on now so that it can be submitted, instead of trying to just finish a question and realizing afterwards that nothing was saved, because you can save as you go along. All right, that's the important thing to remember. All right, so that's the setup of the test and the quiz. I'll leave it there. I don't know, does anybody have any other questions? Shafak, do you still have another question, or is your hand just raised?
No,
Okay, no problem. All right, so you guys are dismissed. I don't have anything else for us to chat about. I have everybody's attendance. You know the dates, you know what's needed, and I'll see you on Thursday. I'll stick around for a few more minutes in case there are questions that people have for me. All right, have a great day.
Have a good day,
Thank you,
Professor.
Professor. Have
You
a good
too.
one.
Bye.